Yes, grade 12s, the cash flow statement. Once again, I see panicky amongst the grade 12s when you hear about the cash flow statement. But, as I said earlier, don't fear when Ashraf is near. Let's go through it. Let's go for it. The cash flow statement. What is the cash flow statement? Remember that it reflects the movement of cash from where? From an enterprise during a specific period. In other words, you want to know, the question that you need to ask yourself is, why is my bank account increasing or why is my bank account decreasing? And remember, what's very, very important, that the Companies Act stipulates that you have to draw up a cash flow statement. So that question is, why do we have to do it? Because it's stipulated by the Companies Act. Let's look at this. What is required of us? 1, you are expected to do an income statement, which you are familiar with. You've done many of those, right? You've done a balance sheet. Again, old hat, but important for the exams. You've got to know the balance sheet as well. For today's segment, we are looking, and the emphasis is on cash flow statements. Got that? All right, now, why do we then prepare a cash flow statement? What's the purpose behind doing a cash flow statement? Number 1, to determine the cash inflows, as you can see there, for the financial period. It means, where's the money coming from? Where's the moolah coming from?
Yes.
Okay? Secondly, if you look at your cash outflows, where's the flus going to? Where are you spending it? Right? So you need to know that as well. And then, what is the effect of the changes? We remember we're receiving money, we're paying out money. What is that? How is it affecting us? Watch this here, guys. So 1, we said, it has to be prepared as part of the published financial statements of a public company. Compulsory by law as stipulated by the Companies Act. 1, it helps you assess the liquidity of the company. That means, how liquid are we in terms of the cash that is available, right? Also, determine whether the company generates sufficient cash from its operations to maintain its current operating capacity. Okay, big words, but watch this here.
Seems to be quite an important part of accounting.
Absolutely, because remember that your income statement is limited. Why? Because it only deals with profits and losses.
Okay.
Incomes and expenses, am I right?
Yes.
This deals with the actual cash situation. That means this gives you an indication that if my bank increased, why did it increase? If my bank decreased, why did my bank account decrease?
And everybody wants to know what's happening with their cash.
Absolutely. That's the bottom line. You want to know that your cash situation. So now watch this. Your cash flow statement, grade 12s, is divided into 3 sections. What are those sections? The first one deals with operating activities, right? You remember that one?
Okay. I remember that one.
The second one deals with investing activities, right? And the third one deals with my financing activities. So remember those 3 categories that you will be dealing with. Why? Because this is what it means. Operations, what are we talking about? We are talking about the cash in a company that involves the buying and selling, inventory, receipts from debtors, payments to creditors, etc. So those are all your operations. That's where we are generating cash because of operations. Now, when we talk about investing activities, what are we talking about? We are talking about the results of buying and selling of fixed assets. That's what you're going to look at, guys. Remember, you are going to invest money in your fixed assets because your fixed assets are going to generate profit for you. So therefore, it's important for you to know what amount has been invested in my fixed assets. Right? And remember, another pertinent point. Do not forget, under our investing activities, to look at fixed deposits. Because sometimes this particular aspect is often neglected. So make sure that you know that your fixed deposit will also affect your investments. And then we move on to the next one, which is the financing. In other words, Nonhlanhla, what are we saying? How are we raising the finance for this particular company? What are we doing? And this is where we talk of selling or issuing of more shares. Got that? And also, any loans that we may be taking or paying off the loans. So remember, guys, when we are talking cash flow statements, we are talking operations, we're talking investing activities, and we're talking financing activities. Got that? Sure, I'm sure it's ringing a bell somewhere.
I've got it. It's coming back.
Brilliant, brilliant. Okay, now, let us recap what we've done in this section. We've said that it is important for a company to produce an income statement. It's important for them to produce a balance sheet. And also, it's important for them to draw up a cash flow statement. Now, remember, tomorrow at 10 to 9, what's going to happen? The packet's going to be opened. And your exam paper's going to come out of there. And what's in there? Well,
cash flow statements?
Cash flow statements, who knows? Remember, it's such an important section, guys, that if you notice and if you looked at all your past examination papers, right? Remember, we've made reference to these right through the year. And what did we say at the beginning of the year? We said that make sure you've got all your past exam papers, because accounting is about practice. It's about putting pen to paper. You cannot read and study accounting. It's not a reading subject. No. You can read until the cows come home. The only thing that's going to improve is your vocabulary. As far as your accounting result is concerned, you need to put pen to paper. Right. So now, coming back to the cash flow statement, what did we say? We said, right, it's stipulated in the Companies Act, you need to prepare a cash flow statement, okay? Included with that, we said, it's the income statement, it's the balance sheet, and it's the cash flow statement. So therefore, the cash flow statement is important. We then went further and said, why do we prepare the cash flow statement? If we look at the slide again, we said here that, remember, it is to determine our inflows, what are our sources of cash, where's the money coming from. We also said it deals with our outflows, where is the money being utilized. Watch the terminology that I'm using. I'm talking about inflows, cash being generated. I'm talking about outflows, cash being utilized. That terminology is very important. Why? It's going to tie on, it's going to go into what we're going to do later on. Right. Okay. We said we're also going to look at, we've discussed this at length, that it's being part of the published financial statements, right? We talked about the liquidity of the company. That means how liquid are we? Remember, liquid, we're talking about the cash ability of the company. So remember liquidity being important. It determines whether the company generates sufficient cash from its operations, because this will clearly indicate to you there's somewhere there's a shortfall. So you know, management knows what to concentrate on. And therefore, what did we say? We said finally, the cash flow is separated into 3 sections. What were they? Operations, the investing activities, and the financing activities. Okay, and within that we said buying and selling, we looked at tangible assets, we looked at fixed deposits, and we finally looked at our financing activities in terms of the issuing of shares and also the repayment of loans. Okay.
All right.
Up to there for now. Don't go away. We'll be back with you just now.
Thank you so much for that one, Ashraf.